Hello guys, welcome to the Train Parrot. I've got a very interesting setup that I want to share with you guys. This is time sensitive information. It could be unfolding. Maybe as I'm speaking now, it might be already breaking out. So I want to share it as the first video of the day after coming back from a 3-day break. I took some time off. You probably noticed I didn't publish any video over the weekend. I'll be publishing another video. That one is going to follow up right after this one. It's going to be an in-depth look at the markets with all the alpha. So if you're not interested in this degen setup, skip this one or watch it just for curiosity. As an investor, probably you're more interested in the other video anyways. Guys, if you like this type of content, make sure that you're subscribed to the channel. Hit the notification bell to get notified every time I put out one of these videos. Let's see if we can get into 1,000 likes today. So before I share the actual setup, let's look at the 4-hour time frame to get a context of where we are in terms of the structure of the price. And as you can see, we are getting very close to a resistance. We are at the moment at an RSI of 42, and I will say that between 43 or 44 is currently the resistance. Let's update this to 43, and you can see on the price how close we are to that resistance. Right above the price, we have two fair value gaps, an initial one that ends at 84.5, and then the second one ending at 85.7. Over the weekend, we broke down from this trend line, we turned it into resistance, low volumes, and as soon as we approach Sunday, we started bleeding back down. So we had a dump that started over the weekend that must have produced a CME gap. So if you've been watching my channel, you probably can anticipate what I'm gonna start saying now and where I'm heading to. We do have also a fair value gap below the price, now ending at around 82.8. Of course, this setup could fail. Let me give you a little bit more of detail. On the CPR monthly for the month of March, you can see that the price action has lost it. We spent pretty much all March trying to cross above it. The first attempt was the Trump pump. The second one got just there to the last pivot. It couldn't go beyond that. It got sold off. It had to battle with all this resistance at around 94.8. And on Sunday, we produced this red candle that now is a full body and is not just wicks to the downside. So therefore, any move back up now, it's more likely to see resistance at some point. That could be resistance when it faces those pivots or slightly below it. Let's look at the CME action at the moment. You can see that over the weekend, we left all this gap in here. Price open at around 82, and so far it has taken half of the CME gap. The leftover at the moment is from 84 to 86.5 priced on Binance. Maybe slightly lower. You can tell in here that CME gets only into 85.955, and I doubt that that's more expensive on Binance. So maybe we need to be a bit careful here with the target of the CME gap. Remember as well that we are getting too close to take the CME gap below us. The leftover that on Binance is from 77.2 to 78.3. If now we go into the short-term liquidity on Binance, you can see that we are forming this triangle with a horizontal resistance precisely at 83.6. That is the current resistance. This is on the 15 minutes, therefore is an absolutely extremely risky setup. So only if you know how to manage your risk, you can consider this. If you are a pro and you know how to short, you can consider instead to take a short. Let's not turn this into your first short ever. If you don't have experience, stay away, because price can initiate a big move to the upside. And if you don't know how to manage your risk, that is the end of your account. So far, there is no breakout. We just did a recent attempt a few minutes ago to break the 83.6, and this needs to hold this ascending sloping support let's put it a bit better, something like this. Support is at around 82, depending on the area of impact. If the price comes back down in here, it could also hold these levels of resistance and do another attempt much quicker. So watch out for moves like this, getting bought up and then an attempt from there. Remember that many times this can also happen, that you don't just only do a liquidation hand and then you still go to the low levels and take the CME gap below us. So keep that in mind when you are considering what's going to be your risk management plan. Whether you use a stop loss or you're gonna do DCAing, it must consider those risks. So you can already see that I have a conservative target of 85,500 is the first target, and that was the support of the weekend that got broken. So going there and testing that level for a full confirmation that we are going lower could be a potential initial target for the breakout. Of course, if we hold in there, then we have a big liquidation, the first one where we take out some shorts, and that is starting from around 87.3 ending at 87.600. There is tons of liquidations to the upside, but whichever you want to target, if you are thinking that 80k as a psychological level might hold, and this bounce that we just had from there by the dollar should be expected to possibly take more liquidation levels. Now with the downtrend and with some levels broken on weekly and all of that, I wouldn't leave my long by itself without looking at what's going on or without trailing with some heavy measures to control that risk. The problem of entering on a short right here is it's not less risky, because if you placed a short, let's say from 87 or from 89, you're basically adding up to the risk of everybody that is already in a short on those levels. So watch out for where you place your stop loss or where your account gets liquidated, or ideally if you're using even isolated mode, where is your risk? Because if you place it in any area in red or beyond, you're just throwing more petrol into the fire for that bounce potential from 80k to catch way more shorts before it could potentially still continue to the downside. So the second target I will say is 87, but for that we need to manage to go slightly beyond this level. And I think those liquidations were all placed over the weekend. They were all thinking, okay, we're gonna dump from here. The longs enter at 84, they got smashed, and the shorts are claiming victory in here. But in my opinion, any short entering right now from below 90 is a late short, and they have the highest risk at the moment of liquidation or market maker going for them. People that enter from way higher prices, of course, they're just sitting on their couch and watching the movie go on, because they are expecting at the moment to at the very least get to the CME gap, if not beyond. And I'm talking about that one at 78 to get started, and even potentially lower levels that we're gonna cover in the next video when I go in depth with the Bitcoin surgery. Past 30 days liquidation levels, we have this 84, then we have some depression that increases again at 89. The 87 doesn't appear here, interestingly, but if we go to the same website, CoinGlass, on the last 3 days, you can see that that 87 is somewhere in there. So this shape that you're seeing in the price there, that is low time frames, is either showing you a triangle with that neck at 83 point something that we reviewed before, or is showing us as well an inverse head and shoulders that is also targeting that. So it's basically a setup to hit all the shorts that enter over the weekend, and the highest likelihood is just to take them out before collapsing again, unless we start seeing something different on the 4-hour and ideally on the daily, because at the moment pretty much every time frame from 4-hour and upwards is just in a bearish structure with lower lows and lower highs. And before I let you go, of course the setup gets invalidated if we get to hit the 15-minute support somewhere around here and we start breaking any of the lows. Like for example, the most recent low is 81,255. we're getting closer to the market open in general markets, and I just checked, and there are plenty of big techs that are putting pre-market prices in the negative. I just think that at the moment everybody's entering a short for that, so there's always that chance that Bitcoin could potentially just give that slap in the face, get to 87 and then dump, or get to 85, 86 and then dump down. And this setup is not just to make you aware and potentially take some advantage of that long, but also if you're considering, oh, things are looking very crappy on Monday, you place a short at around 83, 82, you place your liquidation levels around here, and then it bounces to those levels. And I'm sure that many people are thinking to enter a short from right here. They might get away with not getting hit, but now you know where is the risk and what's getting heavy on the top end. Guys, if you want to trade Bitcoin or altcoins, consider doing it using one of the links in the description. For example, on OKX, you can claim 60,000 in rewards by using the link as well. You can reduce your trading fees to the minimum. I've got also 2 exchanges that are non-KYC, starting with BitUnix and Bluffin. Either of them are doing great campaigns. The advantage of BitUnix is that it gives decent rewards no matter how small is the deposit you're planning to make. Bluffin currently is offering a great campaign, even including a Model 3 Tesla as part of the rewards. Of course, all rewards are based on trading volume and the size of the deposits. I'll see you in the next video. Make sure that you hit the like and write down a comment down below. Thanks so much for all the comments that you left on Telegram, Instagram, and Twitter. I was trying as well to disconnect a little bit to reset the machine, and I feel much more fresh today, so hopefully you're gonna like the videos that are coming as well. See you in the next one. Bye bye.